Good afternoon, everyone who tuned in. Welcome again to a workshop on employee budget and employee experience. I'll be the host for this workshop. I am Abhishek Mahato. I lead the employee benefits experience at Pazcare, India's leading employee benefits platform. Great to see all the folks joining in the afternoon. We will wait for some more time so that few other folks who are supposed to join would join in. Till then, if people want to add any kind of comments, please do add in the comment section and we'll take it up. If we are clearly audible and visible, do share a high five maybe on the chat. So also, guys, just wanted to add whatever questions you guys have, do ask that because we wanted to make it a two-way session. Yes, we have tried to cover the major points while we look at while we are trying to balance the budget and the employee experience. But if there are any specific questions which you guys have, please feel free to put them on the comment section, and let's make this a little interactive so that we can get the most out of it. So I guess we would start. So this session is mostly from whatever over a last month, me and my founder Sanchit have been analyzing from the policies what we handle, which is around 150, 1,500 policies what we are managing, and understanding the claims and utilization for high growth startups, including some of the top unicorns and enterprises in the country. Of course, we came through a lot of readings from that, and that is what we would be mostly talking about. That we have seen HR folks and people folks who are coming in and they want to construct a policy which is very employee friendly and trying to offer a lot of benefits for their employees. But again, the end struggle comes with finance because the budgets are also very limited. And what is the most what you can offer amongst the budget is something what we would be talking about today. In this session, we can say we would learn the art and science of benchmarking an employee insurance policy. The idea would be to understand how can we look at a policy which has very high utilization rather than getting the coverages which might not get utilized, and also in general, like how the prices are arrived by any insurance company while they're offering you benefits, and as well ensuring that year on year cost increment is not really high. So we have also created a small poll in order to make the session a little more interactive. The poll would be visible on your screen. We would request folks who have joined in this conversation to please take that poll, the first one mostly. It would help us structure the conversation what we are going to take in the next 30 minutes. So guys, please vote. So just for people who probably are looking at the screen, the poll is about what do you think your employees want? I'm sure as an employee, you definitely have a lot of thought around what is the kind of benefits you would be looking at. Maybe and then as an employer and as a requirement basis, there are a lot of policies in the country which are just there, which are existing. But when we try to deep down the policy, we do not really see a lot of policies which are going to have high utilization, high benefit for their employees. And that is where we are talking about a policy which matters. So please share your feedback here. Apart from the poll also, if you have any other thoughts, please put it on the comment section. We'll take it up. Great, I guess 74% of the people have responded to it. And I guess we are good to go to the slides. So yeah, we have been forecasting the results, what came out of the poll. 26 people who have voted for policy that matters, which is a great thing. Of course, sets up the context what we want to talk about here. On a scale of 1 to 5, how likely do you think your employees are happy with their current benefits? 3, amazing. That's what we are looking at because people are having opinion and feedback from the policy which they are running, and that gives them a better perspective what they want to add to the policy or what could be there in the policy which can offer more for the employees. So we'll move to the first slide. We first talk around the policy optimization. The first part of the webinar would be about policy optimization. Why your coverage matters? Because today, whatever survey we were able to do, and we were able to have a sample size of 1,000 employees coming in and voting, 8 out of 10 people picked up better employee benefits over pay hikes, and which could be because of the reason that today, when you talk about any kind of insurance, when people are specifically buying for their parents, it is very difficult to find out in the market. And when we talk about a group insurance policy, a parental coverage comes from everything covered from day one. So again, that is the reason I believe this has been a very highly upvote for us. Definitely, again, 6 out of 10 employees choose job offers with better perks, which is, again, everybody is aware about the salary which is there in place, but a better policy. Let's talk about an example that maybe you are moving from an organization which is giving you a 40% or a 50% hike, but you have an ailing family member, maybe someone who is going through regular dialysis and regular chemotherapy. So it is very important that there is a policy cover which also covers those expenses, just not the salary hike. So of course, people really look into the policies which has these kind of coverages or benefits which are covering most of the ancillary expenses apart from salary hikes. Again, like we have been speaking, 20% of the companies offer family-friendly policies. By that, we mean just not the employees are covered. And these numbers are spiking every day today, mostly because when uh, people used to buy employee benefits or insurance policies only because there was a government regulation required. Post-COVID, of course, the dynamics around insurance, the penetration around insurance has increased. And because of the awareness, this percentage is only going up and will go up. 7 ways we would be talking around the optimization of insurance and few steps around it. But the idea would be to lower future annual premiums, because which is also very important. I know maybe there would be few people who have joined in this and they would be constructing a policy first time for their organization. One very important thing which does not come into the mind when I talk to a lot of clients who are constructing the first employee benefits policy for their organization is that they are really not aware that how this year's claims is going to affect the cost next year. So that is something which we would be covering in this. And again, cost being important, we would also like to talk about the most utilized coverages which are there in place. So that is something we would be covering in this whole session. So we here are with the first case, what we are going to talk about. The case scenario has been picked up from a leading B2C brand, which is also our client. We have been servicing them for over 3 years now. The policy type is employee, spouse, and children. Does not cover parents in their policy. The organization is good 800, 900 employees right now. If you talk about OPD, the policy does not cover OPD. And if we talk about the benchmarking of the 1500 policies, what we did, only 2% of the companies offer OPD. The reason being, first is the cost implication of covering OPD is really high. For folks who do not understand OPD, OPD is outpatient coverages. Outpatient coverages is something which is the claims arising out of non-hospitalization of the employee. This could be anything and everything from a regular doctor consultation, or maybe your employee is going for ultrasound, and these kind of things are not usually covered in the group health insurance policies what you buy. Saying that, group health insurance mostly covers your expenses, which are 24 hour, which has 24 hour of hospitalization. Only then group health insurance covers those claims. Definitely, there are a couple of surgeries or procedures which are there today, like a chemotherapy or a dialysis, which does not take a day's hospitalization. These treatments fall into daycare, and today in most of the health insurance policy, all the daycare treatments are covered. But again, OPD is above and beyond these two things, and that's the reason when it comes to the cost impact, a lot of people have not opted it. And people who have opted it, like why the penetration is just 2%, that it's not only 2% of the companies can actually afford OPD coverages, but the challenges around utilization is also there. Today, any of you who wants to buy or add an OPD coverage in your policy, 90% of the insurance companies does this coverage on reimbursement basis only. So, example, today XYZ private limited wants to offer OPD coverage in their policy of, let's say, 5. An employee cannot go and claim this on a cashless basis. 90% of the insurance company does this completely on reimbursement basis. And I'm sure people who have been managing group health insurance, they know that a lot of people do not file for their claims because the reimbursement procedure is very tedious. And when it comes to very small size or very small tickets of reimbursement claims, people really do not claim. So even though you are paying a huge amount for adding this coverage for your employees, I mean, I'm good to talk about, but when it comes to utilization, there is a huge problem. If you want me to answer that, what the solution around OPD is, you should look for people who can offer cashless experience and a little more seamless experience. You can look at alternatives which are just not insurance companies, but there are multiple vendors. Even we do it in a very different way apart from insurance companies. So that is something that we can look at. The second part, we want to talk about room rent. I know while we benchmarked a lot of policies, because uh, there were a lot of funded companies who were buying policies which was with no capping in the policy. By no capping, I'm saying that today an employee can go in the hospital and opt for any kind of room in the hospital which is available. Yes, when you think from design perspective, you might feel that there's something which is going to give a lot of benefit to my employee. But just to uh, throw an information on your face, that a hospital really does not get any incentive to guide an employee to opt for a lower room. Hospital is doing a business, and most of the time they would push your employee, even if he's going for a very small surgery, like today removal of a kidney stone, which is maybe a 1 day hospitalization. They would push them to take a suite in the hospital, thereby bloating the claim. So we also did research with the TPAs, the third party administrators who basically monitor the claims for insurance companies. In metro cities, a twin sharing room at 80% of the hospitals are available at 3,000 to 4,000 rupees. And in non-metro, the cost can be as low as 1,500. So we highly recommend that in your policies, if you do not have any capping, you should put certain capping, which is 2% and 4%, which is a standard recommendation, what we tell most of our clients. So this is something which you should look at. It definitely helps keeping your policy under control and hospitals misutilizing the coverage for your employees. Again, the third point comes to maternity. 4 out of 10 companies today have below par maternity coverages, because again, these maternity coverages for most of the policies have been going around from last 5 years or 6 years, where standard coverage is around at 25 to 35,000. But again, reading at all the maternity claims what we have handled, a capping of 50K for normal maternity is suggested, and a C-section could be covered up to 75K, because more and more folks today are claiming for C-sec when it comes to maternity claims. And that is something which you can look at. One more thing, in the generation where we are here and because of lifestyle changes, so the IVF requirement is increasing. So within your maternity coverage, you can opt for IVF coverage as well. And this would not impact a huge, this would not have a very huge cost impact. If you want to buy IVF inclusion separately, yes, it might end up being very costly. But if you want to include the IVF inclusion within the maternity limit, it would be really, really great. So this was the case scenario. Anything from anyone on these coverages? If you want to put something in, please go ahead and put the questions. Again, with this, whatever we were able to guide or whatever we were able to inform basis their claims to this client, they were able to reduce their cost of premium by 15%, adding a saving up to 5.6 lakhs. So which is huge for anybody who was participating and designing this policy. 5.6 lakhs in terms of cost reduction is definitely a very good number when you think from the cost perspective. And they have optimized their current policy to overcome the unexpected future premiums which are going to come, because they have put in certain caps in the policy which would ensure that the claims really do not run away from 100% to 200% year on year. So in the scenario 2, we have covered a major SaaS company which runs a policy which includes spouse and children and also the parents. Here we have been looking at adding few more things apart from whatever was running in their policy. Modern treatments is the point what we wanted to cover. Modern treatment is nothing but, if we talk about stone removal, earlier the surgery was tedious, but right now there are laser treatments which are available. So that could be one of the examples. You can also talk about oral chemotherapy. For folks who are not aware that chemotherapy as a general process, who know that there are ways where the tablets are there now, where it could be orally administered. And a lot of policies in the market today do not cover it until unless it has a provision for modern treatment as well. So this usually, when you ask your insurance provider to add this, the coverage comes at 25% of the sum insured. So let's say if you have a 5 lakh sum insured, only 25% of that 5 lakh would be covered for modern treatments, but you can get this increased up to 50% and even 100% also, but that would have some kind of cost implication. So again, just to reiterate, chemotherapy via oral administration, robotic surgery, stem cell surgery, and all these kind of things are covered under the modern treatments. One very popular treatment, of course, I'm sure people are aware of the latest budget which was there. Government has allocated 15% more budget towards the Ayurvedic treatments, Ayush treatments, that was there in the policy. And these are also the treatments which you can get added in the policy because a lot of people believe in it, a lot of people are using it. The only catch is a lot of people in the market feel that Ayush coverage is something, any kind of Ayurvedic treatment, but again, the basic principle of group policy exists that it needs a hospitalization of 24 hours. And do check with your vendors what are the Ayush hospitals it is covered. It is not that you can go to any kind of clinic which is available in your neighborhood and claim this, but there is a government listed hospitals which are there where you can go and opt for Ayush coverages. Definitely, we have been talking about the inclusion over the time and LGBTQ, even live-in partners is something what you can today in modern policies get covered because more and more people are opting for it. So you can ask your insurance vendor or the group health vendor to get that coverage in the policy. And that LGBTQ and the live-in partner would be added in your policy without any cost. Again, continuing on the case scenario, copay. Just to explain copay, today, if let's say there is a claim of 1 lakh rupees, and let's say you have constructed a policy which has 10% copay for claims, that means 10,000 rupees worth of that claim needs to be paid out by the employee himself, and 90,000 rupees of the claim is covered from the insurance coverage. 11% of the companies, what we have spoken, administer this. Yes, a lot of time people talk about it from the perspective that it might not be really great for employees. But again, this is a very important measure which you should add if you are seeing your policy costing 150%, 200% year on year. Because again, uh, going back to the point that hospitals do not have any incentives to lower your claims. They only want to charge as much as possible. They do not even really care that, okay, this family, this person who has come for a claim, he also has 3 more people in the same policy covered. So if the coverage is 5 lakhs, a hospital most of the time would try that how can they utilize the complete 5 lakh claims. So it is very important to administer a certain copay in the policy, because as soon as when hospital would tell them that, hey, out of that 5 lakh claim, what we are charging you, 50,000 would be paid out of your pocket. Automatically, employee would be very cognizant and pick up a more reasonable coverage or a reasonable hospitalization for himself or his dependents. So claim adding a copay of 10% is highly recommended, and especially when you are running a parental policy, because 80% of the claims in your policy would attribute to parents. So you can also opt just a copay of 10% for parents itself. So that's one thing. Disease-wise limits, one of the most favorite things for us while we are doing the consulting today is disease-wise capping. Just stopping here, I guess I have a question here from Hema. Hi Abhishek, for room rent capping 2% on rooms and 4% is standard. I understand that it will help me save my claim uptake. How do we have some players in the market who go for beyond this percentage of capping, and what's their experience? In my organization, we have no capping on the room rent. So, Hema, very valid question, and we were expecting some kind of question around this. See, we can, if you talk about offering in the market for more than beyond 2% and 4%, yes, it is there. Why insurance companies are giving? Because there are a lot of demand around it, and insurance companies are happy to give it to you because at the end you're asking and they get a higher premium. So let's say if you're buying a policy which has a 2%, 4% room rent, and you want them to upgrade it to no capping, definitely there would be a cost implication. So insurance company sees it from the perspective that, hey, they're collecting a little more premium. The problem around definitely. So the problem around no capping is that today, if I go to let's say very close to my home, there is a hospital called Sakra. If I go there, a twin sharing room is as much as 6,500 to 7,000. Okay. What is my concern as an employee or as a patient or someone whose family is ailing is that my family member or I get a very good treatment, and I do not shell out a lot of money because I also have an insurance coverage. So 6,500 is more than enough for me to just after the surgery rest in that room and then maybe get discharged next day. What would happen as soon as I have no capping policies, because insurance, because the hospitals and their TPA counters have a target of higher billing. So they would say, hey, Abhishek, why don't you opt for this suite, which is empty? One of the suites are empty, which just costs 30,000 rupees per night or 40,000 rupees per night, because your insurance policy covers, nothing would be paid out from your pocket. So Abhishek would say, why not? Since he is not paying anything. But what has happened, Hema, here is that Abhishek, otherwise, if the capping was there, might have opted for a room rent which is 5,000 or 6,000. And he could have opted for 40,000 divided by 5,000, which is 8 nights if the ailment was something serious or his family member was going through something serious. He could have covered everything on that cost rather than just taking 1 day of luxury. And it is not only that, you can also think from the perspective that 8 of your employees could have claimed from that 40,000 rupees claim, but because you had no capping, only one person was able to claim. Your cost for next year would have been only 5,000, but because of that claim, the cost has gone to 40,000. When we talk about employee benefits, of course, it's a benefit. It is not a luxury. So that is something what you can always think around. And I'm sure the vendor whom you have, the insurance company whom you have, you can ask for the statistics that 80% of the hospitals or 90% of the hospitals, what is the room rent in twin sharing basis? And maybe that would help you take an informed decision rather than maybe whatever we are trying to forecast here. Cool. Does that make sense? Again, we also have another question. Can you explain on these disease-wise sublimits more? Definitely, we'll answer that. We are moving to the slide because we want to cover that point. So in disease-wise sublimits, of course, what we are saying when we say disease-wise sublimits, it is the disease which are of non-life-threatening nature. Like these are diseases which would not end up killing someone. Just to name a few, these are knee replacement, cataract, maybe a hernia operation, which is not really serious. So these are the kind of diseases which are covered when we talk about disease-wise limits. A lot of people get a shock, like when we talk to a lot of HR and finance folks, that you should implement disease-wise limit. They feel that it would be applicable to all kind of claim which is coming in the policy. So just to clarify, when we say disease-wise limits and someone is getting a claim for cancer, this does not apply. This is only applicable for, like I said, non-life-threatening nature diseases, which is mostly cataract, knee replacement. And how do you decide these sublimits? Again, you can ask your insurance provider or the broker who is there that what is the standard rate which is going on in most of the cities where your employees are placed. Just to give an example, a cataract treatment in Bangalore, if you go for a cataract treatment for one of your parents, usually this treatment happens for one eye at a time. Nobody goes for both the eyes together. When you go for one of the eyes, a standard Bausch and Lomb lens does not cost more than 25,000 to 35,000 in Bangalore, in most of the hospitals. Now, let's say there is a scenario where your policy does not have this sublimit. What would happen? The hospital would immediately ask you that what is your coverage. He would see that your policy is uncapped. He would push you for, let's say, a Japanese lens, which does the same thing just because of the import cost and things like that. And they would bill you 1,50,000 for that. And of course, your employee is not paying it out of their pocket. They feel that, okay, wow, I got my dad a Japanese lens. But what it is doing for the employer, that the claim which could have been covered in 25,000 to 35,000 ended up costing 1,50,000 to the organization. And of course, definitely it is going to see a price impact while you go and renew the policy. So I guess we were able to answer that question. One more question. Does IVF treatment is covered under disease-wise sublimit? So IVF treatment, to answer that, IVF treatment would be covered under the maternity limit. So that is a standard procedure of covering IVF treatment until unless someone has an IVF coverage which is apart from maternity. But again, this would also not fall under disease-wise sublimit until unless you want to construct it in that way. Hope that answers the question. Cool. Cool. We moving to the next one. The SaaS company has analyzed claims to reduce future premium cost over time to 22% by just putting those caps in terms of disease-wise capping. By 22%, how did we arrive at that 22%? Is because we saw the similar nature of claims, and we did the math that if the cappings were applicable, how much it would have reduced the cost for them. So it ended up at 22%. And their comprehensive benefit package is one of the reasons for the low attrition rates, because we see a lot of employees who have their parents who are going through dialysis, who are going through chemotherapies. Of course, they understand that just moving the organization, but the policy is covering their chemotherapy, which is going on month, dialysis, which is going on week, is covered under the policy. So that is definitely making them stay with the organization. So that's about it. One more important thing, we have been constantly talking about how added coverages, why to put sublimits, why should you look at capping certain of coverages because it would impact your next year premium for people who are probably getting into the first time renewal for their policies, and if they have never done it, we thought we would just give you a small picture around how insurance premium is calculated. So it's very simple. Like today, example, if you are someone who handles your employee benefits and your finances come to you, hey, March is coming, I have to budget for the employee insurance policy, what would be your cost? So you could, the easiest way to say is that, hey, my last year's premium was 20 lakhs. This year it might increase by another 15%. But your group health insurance policy is completely dependent on the claims which has incurred this year. So what you can do is very quickly run back to your insurance provider or the broker and ask for their this year's claims, which has happened till date. And you can also see what is the life increase in the policy. So let's say in 2023, you started your policy with 100 employees. Today, your policy is 200 employees. So technically, there is 100% life increase. So you take some impact of that life increase, maybe 50% of that. Claims is example 20 lakhs. 50% of life impact is, let's say, 20 lakhs plus 50%, which is another 10 lakhs, which is 30 lakhs. Plus, an insurance company would always we have taken this at a lower rate. Maybe this is something what you can also negotiate with your insurance provider. That 10% of loading comes from IBNR. IBNR is nothing but incurred but not reported claims. Uh, I mean, today your organization policy might expire today, but there would be a lot of people in your organization who have not claimed their policy, which are pertaining to last 30 days. And not only that, I'm sure you would be aware of the coverage, which is called pre and post hospitalization in your policy, which is 60 days of pre hospitalization and 90 days of post hospitalization. So even if your policy is expiring today on 8th of February, so people are eligible to claim post hospitalization up to 90 days from here. So they would be claiming that in the same policy. They would not be claiming in the next year's policy or from the 9th, from whatever policy you buy from 9th of February, but they would be claiming in this policy only. So insurance company take consideration of another 10% of claims which are going to come from IBNRs, which are the not reported claims, and medical inflation. Year on year, the medical inflation in India has been very high, around 10 to 11%. So all these being attributed, approximately another 10% you can add, and that would be your premium for this year. So I hope this gives us some picture. Anything? Most medical policy do not include dental expenses. Any chance this could be added? So just to clarify on this question that dental expenses arising out of any accident, yes, it is covered. But when you're talking about dental expenses, which is maybe a tooth cleaning, maybe a root canal, yes, it is not covered because insurance policies usually avoid any coverage which is cosmetic in nature. So that's the reason most of the dental expenses are not covered. But again, you can ask your insurance provider to add a very small provision, which could be around 1,000 rupees or 1,500 rupees per family for dental coverages as well, because it gets utilized in a wrong way and a lot of propositions because the control is not there. XYZ clinic might charge you 5,000 rupees for a root canal. ABC can charge you 15,000 rupees also for root canal. So there is no control towards. That's the reason most of the time GMC would not cover those expenses. Answering one more thing, apologies, I was not able to explain TPA. TPA is a third party administrator, which is there in the policy to actually administer your claims. I'm sure you might have come across the names like MediAssist, Paramount, Health India, FHPL. These are the TPA companies which work with the insurance companies to administer your claims. So that's what TPA is. Moving into the next bit, that how can we look at maximizing your insurance policy? Definitely, if your policy today does not have a corporate buffer, that's a most prioritized thing which you should look at adding. Just to talk a little bit around corporate buffer, this is a buffer which you can use in claims which are higher than the normal sum insured which you have taken. Example, you have a 3 lakh rupees sum insured. In case you have a 3 lakh rupees sum insured and the claim goes beyond 3 lakhs, let's say the claim comes at 4 lakh rupees, and this is an employee who is going from a serious life-threatening nature of a claim, and let's say you had a corporate buffer of 5 lakh rupees, so you would be able to approve this to your insurance provider and insurance company that for this employee who is ailing because of a life-threatening nature, some amount from this 5 lakh can be utilized for his claim as well. Corporate buffer, one more thing, is not visible to your employees. It is mostly at the discretion of people who are controlling this policy. Again, most of the 90% of the time, it is the HR folks at some organization. Of course, finance also has visibility around it. But again, at a very due diligent way, it is used and the control is with HR. It is only accessed after an HR's approval. One more important thing, we have been listening to a lot of great HR leaders and CHROs who have been talking about that, yes, health insurance takes care of your hospitalization, but how can we be proactive around what the health insurance needs are and how can we avoid these claims altogether? The inclusion of very simple things like health checkups, doctor consultation, and fitness plans today are the go-to things. Like I'm sure if your organization has gone through health checkups, in very young people, you might see there is a very high spike in cholesterols. The vitamin levels are off. And because people are not testing it, people are not aware what kind of maybe precautionary measure they can take rather than directly getting hospitalized someday. So this could be a very important thing which you should look at adding in your policy mandatorily. And the last bit is comprehensive policy. Yes, I understand today when you want to offer a employee policy, if you want to add parents, it becomes very, very expensive. If I'm talking about if you cover only the employee, spouse, children, the premium could be 5,000 rupees to 6,000 rupees per employee. As soon as you add the parents, it goes as high as 15,000 to 20,000. It becomes 4x or 5x. But you can put it in a capped way. You can put it in a controlled way. Because let's be honest, today buying a policy, health insurance policy for parents, which covers everything from day one, is not only challenging in the market in retail terms, but it is also pretty impossible to buy. Like if you want to buy for someone who is regularly going on chemotherapy and go to an insurance company and ask them to cover that, that's not going to happen irrespective of how much premium you are ready to buy. For people who are a little concerned about the budget, definitely you can look at how the employee can come in and share the cost around that coverage. But again, if in group policy is something what an employer can buy where they can cover the parents and everything can be covered from day one only in group policies. No retail policy is there in the market which would be able to cover an ailing parent by paying premium equivalent to the coverage which is needed. So very difficult. Again, going back, I guess we have one question here. Just a second. Could you explain again how the premium is calculated? Can you just go back to the slide? So, Lumi, I hope the screen is visible to you. Your premium is calculated basis whatever your current year's claim is. Example, your current year's claim is 50 lakh rupees. So 50 lakh plus life increase, like what was your employees in the day one and what is the employee today. Example, the life have increased by 50%. Some portion of it is added on the claims, which is like, let's say 20 or 25%. Half of it you can consider. So 50 lakhs were the claim, 25% is the life increase. So 50 plus 25, which is another 12.5 lakh rupees, which is 62.5. And then 10% is attributed to IBNR, which is incurred but not reported, medical inflation, which is currently at 11%, and TPA, which is third party administrator fees, who also manages your claims, provides e-cards and things like that. So you can add another 10%. So 62.5 plus 10, which is another 6.5 lakh rupees. So if your claims are at 50 lakhs, you can expect your cost this year with a 50% life increase somewhere around 68 to 69 lakhs. Now let's consider if you do not have any life increase, your employee strength has remained the same. 50 lakhs plus 10%, which is 55 lakhs, is the cost what you can expect this year. Hope we have answered that question. So we have covered this. Any points here? Otherwise, we move to the next. Cool. So we move to the policy benchmarking. Whatever we have been able to read from this 1500 policies, what we are managing, we would be talking about it. Any questions as of now from all the folks who have joined in? Cool. Let's move on. So I know today there are a lot of content which is available on what kind of uh, employee benefits policy or employee experience policy you should buy in. And if you would see the screen of this 1500 policy, we also have 37% of the people who are buying in sum insured of 5 lakh for their team. And 12% is around 2 lakhs or less than, 32% have 3 lakhs. But one very interesting fact which is up there on the screen is average claim size for one employee per year or per claim. You can say that is around 1.18 lakh out of this 1500 policies. So if you have relevant measures in your policy, the claim sizes do not go beyond 2 lakhs. Yes, I'm sure people who are present in this webinar, they would know that there would be some cases which would have gone to 10 lakhs also, 12 lakhs also, 15 lakhs also. But while you are designing an employee benefits experience, you really do not make it on the basis of anecdotal cases, but it is majorly on the averages. So if I talk about with this 1500 policies, today the average claim size is not more than 1.18 lakhs. If your policy is covering or giving a coverage of 3 lakh rupees, you are more than good to go. Definitely, if you are seeing continuously your claims are going beyond 3 lakhs, I'm talking about people who have teams like they have been having the same set of employees for last 3 years, and they have ailing parents and aging parents, and the claims is continuously going beyond 3 lakhs, then that is where sometimes you should look at enhancing the sum insured. But I would suggest that do not really look into just buying the coverage because it might look uh, nice or big for the employees, because the utilization always comes at a range of 1 lakh to 2 lakh only most of the times. So that's about the employee benefits policies what we have. Again, like we spoke, that definitely a policy can be designed with parents also at a 5,000 rupees per year per employee. Definitely, it would come with certain caveats. But if you ask your insurance provider and whoever you are talking with, they can definitely construct something around 5,000 to 8,000 rupees, which could be, I'm sure there is an anecdotal story around pizzas and biryanis for your team, which can cost even lesser than that. So definitely you should look at a comprehensive policy for your employees. So I guess we have covered most of the things and tried to keep most of the things very simple. We would love to have any questions if you guys have. That would really help us construct the next workshop as well. But if you have something, do let us know. Any other questions? I guess no questions. But just to add on to everybody who is attending, that you can reach us. You can reach us out. Okay, I guess there is one question which is coming. Could you discuss? So we have a question. Could you discuss about network hospitals? Sandhya, a fair question. I know a lot of people index around the network hospitals, but just to be honest, very, very honest, we also work. There are 30 insurance companies in the country. We work with the people who have a very best claim possibilities. But when you compare it with all the network providers and all the insurance companies, the average of the network hospital for everyone is around 7,000 to 8,000 only. Nobody covers all the hospitals today. Star Health is someone who has right now in the country, when it comes to group policies, the highest coverage in terms of network hospitals. But that being said, network hospitals are something you should really focus on if there is a certain strength of your employees are based out of that location. Let's say, example, you have someone, a huge population of your employees in Visakhapatnam. So you should really be worried about that list. That is something what you can do. One more thing, IRDA has also announced one new notification that cashless anywhere. Just to explain that to folks, uh, any kind of planned hospitalization, if you're going, like today, if you are in a very, very remote part of the country and it has a hospital, you can go up and inform your insurance provider at least 48 hours before, and that can also be done cashless. So the whole idea around network hospitals, first thing is that every insurance company does not have network more than 7,000 8,000 hospitals. But with the IRDA guidelines coming into the same, any planned hospitalization can be done cashless if you intimate your insurance provider 48 hours before. If you want any more questions around that, please reach out to us. We will come on a call and help you with that. I guess that answers it, Sandhya. Next question is, we already have monthly healthcare deductions for those who are enrolling their parents into the policy. What's the trend around this? I would say that's pretty, I would say universal, because a lot of time either employers put that as a part of CTC, which I am really not a very big fan of. But deductions, I'm sure it's a fair thing. The reason being, if you talk about your employees, if your employees are given that much information, that if they really want to buy a coverage from day one for their parents, they would not be able to buy. So once the information and learning is given to employees, I do not think people would find a problem in enrolling parents, even if it is costing 20,000 rupees to cover them. Because today, if you go for a basic 3 lakh rupees cover for a parent, which is at 50 years plus age, with a 4-year waiting period, it would not cost you anywhere less than 30,000 40,000 rupees a year. So I'm sure it is a win-win for everyone. I guess that answers the question. What is the maximum amount an employee can claim for tax benefit? So for this question, I would suggest that you can schedule one call, because for different brackets, there are different kind of amounts which are available. When you talk about a tax benefit, what we have in our platform, every segment has a very different contribution. Like food would have a different allocation, fuel would have a different allocation. Also, going back to the first question, question before this, if you contribute towards the premium for your group cover, you can avail income tax reduction under 80D also. So that is also something a lot of people are not aware of. What is the maximum number of claims can I make in a year? Soundarya, you can make, as I said, I have a company where an employee makes weekly dialysis claim for his mother. So that is 4 times a month, 12 into 4, at least 48, that is happening. But as long as your sum insured is not exhausted, you can make n number of claims. There's no problem in that. Cool. I guess we are done with the questions. For any further questions, please reach out to us. You can also scan the QR code on the screen and get a free claim analysis done for your policy. And also, we would like to offer the consultation module what we have created for our customers. Maybe we would like to give you that experience and get a feedback on that. So please go ahead, scan the QR, and not exactly expert, but then we can definitely come in and put in some inputs here for your policies. I guess we have a question there. No? Last question. Okay, we have 6 minutes. Good. So I guess Hema has asked a question. As an employer, do we get any tax exemption for buying these policies? So not exactly tax exemption, Hema, as an employer, definitely you would be putting this expenses for the yearly expenses, which gets deducted from the income, taxable income. So for more details, I can also get you connected to my finance box. But yes, whatever you spend for employees, you can put it as an expense and remove it from the taxable uh, situation for your organization. So that's pretty much it. We have 5 more minutes just in case if you have any questions, people who are going through their renewals, if you're finding your price to be really high, do let us know. If people are exploring OPD, please let us know. If people are, if you guys are exploring that, hey, I have budget. At times it so happens. So we have another question. At times it so happens that the parent for whom the policy is taken passes away. In this scenario, is it possible to get refund on the policy payment done? Unfortunately, not. Because how an insurance company writes is, uh, you can think it from a perspective of potluck. Uh, the premiums are really low. For I'm again saying that if you have 100 employees and you're buying a 5 lakh rupees coverage, that is 5 lakhs into 100, which is 5 crore worth of coverage, which insurer is writing. For maybe the premium might not be less, more than 4 lakh rupees. So the risk proposition is very high. It's again the whole potluck logic goes in. If the parent has passed away, the premium refund is only possible when the employee gets related, not the member gets related. That is how it works, and that is how it is taken care of. Yes, it is possible in case of when spouses are separating from each other with relevant documents, that premium refund is possible. We have a very comprehensive policy, and introducing caps may not be very popular amongst employees. Is there any other way to optimize the? So, Emma, very fair question. I believe wherever we suggest this to the employers, they come back with this kind of a thought where we are putting. I'll just give example from our organization's perspective as well. Today we are 180 people, and while we started it, we really did not think about the scale where we would be in couple of years' time. And we bought a very comprehensive policy. And immediately post couple of round of funding, we grew from more than 100 or 200, 150 people, and we saw our premium cost, which was 15 lakhs, going to 60 lakhs. That is where everybody comes into the question, be it the leaders, be it the finance people, everybody comes into that question, because the misutilization is not happening from employees perspective, because it is happening by hospitals who are pushing it. The caps are very humble, like you are not putting a cap. What you need to understand is the cap is not being put from the perspective that, hey, cataract creams in the market cost 50,000 rupees, but I am saying I will only cover 30,000. That is where it should be very unpopular, or what you are trying to foray. But if you give relevant data, and at times wherever we suggest these kind of constructions for our uh, employers, we always give them this data to float it amongst the team. And when the first communication goes, while Pazcare onboards any of the new client with a new kind of coverage structure, we talk about all the reduction in a very descriptive nature. We take those questions in the sessions, because it is all about information. I'm sure when you tell someone that, hey, I am reducing the cataract capping from 5 lakhs to 50,000 rupees, he would be like, what? You are reducing it by 90%. But if you are able to give him the number that 90% of the claims in the market cost 25,000, we have still kept it double, then I'm sure he would not have that kind of challenge. It is all around information having a right sync. So I guess I was able to answer that question. How is the claim ratio calculated? So Pankaj, just to answer this question, claim ratio is nothing but the premium what you paid throughout the year, just not the premium what you paid in the beginning of the year, because throughout the year, you would be adding a lot of employees in the policy, and you would be paying a prorated premium for them. So whatever total premium today you have paid, that divided by the claims is something which is the claim ratio. For simple maths, like if you have paid a total premium of 1 crore and your claim is 1.4 crore, your claim ratio is 140%. Hope that answers the question. Do you suggest getting reimbursement later than going for cashless claim to save this misuse than going for claim? On contrary, no. The question here, great, Hema. But this is why it's very important. Again, question is, do you suggest getting reimbursement later than going for cashless claim to save this misuse? Amazing question. Would love to answer this. A lot of people feel that a lot of hospitals push you and would tell you that, hey, why are you waiting for cashless? It would take 2 hours. Why don't you pay it and file for your reimbursement? Because again, hospital prefer to get the cash in hand rather than waiting for the insurance company to settle it. But I would strongly suggest, if you are going to a hospital which can do cashless, please do not opt for reimbursement, because even the insurance company penalizes you. The reason is that today, let's say Abhishek is going for a cataract treatment. Without insurance, the hospital might have charged Abhishek 50,000 rupees. But since he saw an insurance coverage is there, and he sees, let's say, the insurance company is ICICI Lombard. So insurance companies also have a pre-approved, pre-agreed rates with the hospitals, so that the claim outgo is lower, and thereby it also helps insurance companies to keep the claims under control. And whenever someone who goes for a reimbursement instead of a cashless, the insurance company definitely penalizes. A lot of insurance company, biggest to biggest insurance company, penalizes. Highly recommended. Please spend that 20 minutes extra to get the claim processed in cashless. Please do not buy in the idea that you can file the reimbursement later. That would be great. So I guess that has answered the question. Just to give a heads up, it would be great to have feedback from your folks. We would be doing this kind of workshop where we talk more around what to look when you are trying to enhance your policy and also keep the costs under check every 2 months. So we would be talking about it. Please do join in for those sessions as well. Talk about it amongst your peers. We would love to talk more about it and construct this workshop accordingly. So thank you, everyone. Thank you for your time. Thank you for joining us. Until next time, stay safe and take care.